Hi friends, welcome back to the channel. In this video, I'll be talking about 5 things or 5 habits that I've learned from 5 years of losing in the crypto and the forex market. And I'm actually talking about these things because these are things that if I had learned them before I started trading, I would have been able to avoid a lot of mistakes that I made that cost me a lot of money that I lost in the forex and the crypto market, so that you can benefit from these things and you can actually avoid them whenever you are trading. If you are willing to avoid a lot of losses in the crypto and the forex market, ensure you watch this video till the end so that you can be able to avoid all these 5 habits and make a lot of money for yourself in the financial market. So let's dive in right now. The first thing I'll be talking about is studying the market structure. One of the problems a lot of traders have in the crypto and forex market, or even the stock market, is the problem of analysis. A lot of traders use a lot of indicators, Bollinger Bands, and all these things and rely solely on them for trading. I'm not saying indicators are totally bad. There's nothing bad in supporting your price action analysis with some indicators. Even though I don't trade with indicators, but I still recommend that as a beginner, you can actually support whatever thing you have gotten from price action with indicators. But the most important concept of trading or analyzing the market is the market structure. When we talk about market structure, we are talking about 3 things. The market is either in an uptrend, downtrend, or range. So in an uptrend, you want to be looking for opportunities to buy. In a downtrend, you want to be looking for opportunities to sell. In a ranging market, you want to be buying the low of the range and selling the high of the range. If you are a beginner trader, you may not want to be trading ranging market because it requires a lot of expertise to be able to trade a ranging market. So, but overall, studying market structure helps you understand what is happening in the market. So this is how I do it. Whenever I enter the trade, I study market structure on a higher time frame, then scale to the lower time frame and see what the structure is doing. If it aligns with what we have in a higher time frame, then I try to find entry triggers and some other important things. If it does not, I find a way to trade through the lower time frame structure to be able to find entries for myself in the market. So I have videos on market structure, how to identify market structure and trade market structure using some specific strategies. Ensure you find that video in the description below. The second thing is trading on demo. One of the mistakes a lot of traders make today is rushing into live trading. Yes, I'm not saying trading live is not okay. As a beginner, you have to trade on a live market, but trade on demo for at least a month before you start trading on live trading. And this is the reason. The reason is that if you trade on demo, if you learn technical analysis and how to analyze the market, you will be able to understand, to identify your win rate, right? You'll be able to identify the win rate of your strategy, you trade. So whether you trade supply and demand, support and resistance, indicators, anything you trade, if you trade them on demo for a month or 3 months, you'll be able to know your win rate before you get onto live trading. So when you get to live trading is when you test your psychology, but before you trade your psychology, you have to be able to understand what win rate you have with your strategy. So also, if you want to switch strategies, you can also trade demo too, to be able to switch from one strategy to another. The third habit is investing in education. One of the most important things you have to do is to invest in education. So if you want to learn trading, you don't just jump into your MetaTrader 4 or 5 or your Binance or Bybit and start trading because you see someone trading. Invest your time and money in education. So one of the things you can do is find YouTube channels like mine that talk about trading, technical analysis, and learn just things, practice. Then you also can get some paid courses or mentorship from traders who actually have track record and actually trade and learn from them. The fourth thing I will talk about is see losing as a normal thing. In the market, nobody owns the market and nobody controls the market. Nobody knows what exactly the market is about to do next. So when you lose money in the market, don't be devastated. See it as a normal thing. And when you see losing as a normal thing, you will last long in the market, knowing fully well that after a loss, you might actually catch a win. So when you lose and you don't see it as a normal thing and you feel bad, you feel devastated, you fought your strategy, you fought this and fought that, you are getting your psychology messed up. And with that, you enter into another trade with the fear that you may actually lose them, and most times you lose them. So, but when you see losing as a normal thing, you know that at some point you would win, and whenever you win, you know that that is the reward for the loss you are taking earlier on. So, see losing as a normal thing. When you lose, know that you just have to look at your loss, find the reason why you have lost that trade, and try not to repeat that in the next trade. The fifth thing you have to understand is to stick to one strategy. Today, I see a lot of traders jumping from one strategy to another. Today is trading ICT, tomorrow is trading Fibonacci strategy, the next day he is trading supply and demand. After that, he is combining Bollinger Band with RSI and stuff like that. If you want to be profitable in trading, find one strategy, master it, practice it over time, at least for 6 months. Find an average win rate based on your understanding of that strategy, and if you are satisfied with it, trade it. If you're not satisfied with it, then find something else, find another strategy, and repeat the process until you find one that you work with. If you're analyzing the market today using smart money concept and you are looking for the other blocks, and tomorrow you are looking for supply and demand, and the next day you're looking for support and resistance, you are not actually trading. You are just wasting your time. So find one strategy and stick to it over time. Before you conclude that the strategy is not working for you, make sure you have learned a lot about it and you have practiced it for a very long time. If you got value from this video, ensure you smash that like button, subscribe to the channel, and I'll see you in the next one.